Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, we are on pace for one of the best weeks of the year via market performance. So without further ado, let's dive into your top 3 points and see what was really driving the markets this week. At point number 3 is retail sales coming in stronger than expected. Now, June had a bit of a drop off after used car sales and new car sales also dropped off the map, but we are starting to see a bit of a pickup, especially on consumer staples like groceries and other necessities. Now, this does kind of lend some credence to the fact that the consumer still has some relative strength, but that there is some worrying signs that the labor market is starting to get a little bit weaker. So consumers may be a little bit more targeted with where their purchases are going. And that leads us perfectly into our second point of what's driving everything this week, and that is Walmart's earnings. So Walmart reported their quarterly earnings, came out strong across the board, and also raised their guidance for their sales forecast for the rest of the year. Now, management did come out and say that largely they haven't seen much of a drop off in consumer spending trends because more and more consumers, like we talked about in point 3, are becoming very targeted with their purchasing. They're looking for deals, they're looking for value. They're not spending so much on travel or apparel and everything like that. And they're seeing a very large boon in grocery, for instance, and that's really benefiting other retailers like Costco and Walmart who focus on grocery and providing value and deals to their customers. So those industry staples like the Walmarts and everything seeing a little bit more of a tailwind than others such as the Home Depots and Nikes and Lululemons of the world. And then finally, at point number 1, you probably guessed it from last week and from every other month that we do this, but it was inflation data. So we saw CPI year over year fall to 2.9%, finally below that 3% threshold. Now, I like to remind everybody that the Fed's long-term target is 2%, but we continue to be on that pathway down. This was the 4th straight month of moderation on the inflationary data. Now, a lot of this decline this past month was driven by new and used car sales, prices coming down, less spending on airfare and apparel, like we kind of mentioned earlier. Now, what this does is further support the case along with that weakening labor market that we're starting to see, that rise in unemployment, initial jobless claims coming up a little bit. When you take these in combination, it further supports the case for oncoming rate cuts. So right now, we are seeing pretty much a full cut being priced in for the September meeting, whether it's 25 basis points or 50 basis points. We'll get some more clarity as the meeting approaches, and we'll keep you posted right here like we always do. Now, that pretty much does it for your top 3 points this week. What are we looking to for next week? Well, next week, we're going to keep our eyes on the Jackson Hole Symposium. Now, that's where central bankers from across the world come to Jackson Hole, Wyoming to discuss monetary policy. That's going to be headlined by our Fed Chairman, Jerome Powell. And usually this meeting is a case study as to telegraphing where monetary policy for the Fed is going to be going in the future. They usually like to signal there. So we're going to keep our eyes posted on that. Probably update you on that next week. But as always, that pretty much does it for this week's video. If you have additional questions, please reach out to your financial advisor or dig into the written weekend review. But as always, while the weather is still nice, go out there and enjoy your weekend, and we'll see you the same time next week. Thanks again. Bye.